We've got Mortgage America here with 3 predictions around financing in the second half of 2023. You're definitely going to want to watch this one. I am here with one of our partners, good friends, and awesome mortgage contacts, DJ and Kyle Sutera with Mortgage America. And I'm going to stop talking, and they're going to give us 3 predictions for what they see happening in the mortgage and lending markets over the second half of 2023 and what that means for consumers that are thinking about making real estate decisions. So, DJ, I'll let you lead it off. Give us your first prediction.
Yeah, big one. It's already been stated publicly, but we're expecting 2 more federal rate hikes by the end of the year of 25 basis points. We don't know when it's going to happen, so we're just ready for it. I think it's maybe a little bit baked into the market already, but expect those oscillations at some point.
That's prediction number 1. Prediction number 2, Kyle.
The opposite of that. We do not expect to see any rate decreases from the Fed. There's a lot of people that are kind of expecting things to go back to where they were in COVID and before the last couple years. The Fed has given us no reason to believe that they will make any rate decreases. So what that means is that there's no time to wait. If you're waiting for rates to go down to buy, you could be waiting a few years, shelling out money on rent in the meantime. So I wouldn't count on that.
And prediction number 3, back to DJ.
So my prediction here, and there's no actual proof of this, but I think that by summer of next year, we're going to see rates start to go down. Reason being is that there's a presidential election at the end of next year, and they're going to want to try to loosen things up a little bit, and that's that.
So we got 3 predictions here that I'm clear are pretty spot on. The first 2, you're right on. This has been stated. Obviously, we've heard people say things in the government and do the opposite. Welcome to politics and federal government.
Exactly.
A lot of this gets in the weeds in terms of financing and the logistics on the back end of the lending environment. So what does this mean for people that are thinking about transacting?
So biggest thing here is stability, right? So we do have these 2 Fed hikes coming up at some point, but other than that, we're going to stay pretty level through into next year. So that's a big thing. Do you want? Yeah.
What stability gives us? It gives us more sellers that are willing to enter the market. So the inventory should pick back up a little bit. And even though we said, the Fed does not plan to lower their rates, stability in the market can cause a reduction in consumer rates. Maybe not anything crazy, but it can put everybody in a little bit of a better buying power.
Yeah, definitely. When you compare the spread of consumer rates to the federal rates, when there's less hikes, there's less volatility and less risk. So you'll see that margin come down. Hopefully we can see the rates come down for consumers because of that. The other thing is because everything has been tightening up, rates have been continually going up over the last while, access to credit has been limited. When that happens, you need to plan out ahead of time financially for your purchase. Get everything in line, make sure you understand your options, what is available to you, and go into your home search in a much more targeted way, understanding what you're getting into financially.
Namely with your financing. So brings us back to our age-old lesson of get pre-approved as early as possible. Talk about your financing situation with a professional. Put yourself in a position to buy when the time is right and when you're ready.
So you had one other effect of these predictions, and I'm in total agreement about stability because I think the biggest thing that consumers felt is that they buy a house, they put their home up on the market, and then rates jump up 0.5%, and they don't have that stability of here's my payment, here's what I'm getting, knowing the inventory challenges. So stability is going to be good for a lot of people. It leads to informed decision making. So I love that one. Pre-planning, proper preparation. We talk about this all the time, and most agents and most mortgage brokers and mortgage lenders, they don't do a lot of pre-planning. They don't tell their people to start thinking about this stuff months in advance. And the folks that win in the market, meaning they get the house, they get the home they want, and they're comfortable with the decision, they always pre-plan. So that's a really great piece of advice. Talk about sort of a return to the norm here with some seasonality. I know that was the other thing you had mentioned.
Mm-hmm. The seasonality being that we almost always see a decrease in business and transactions in the winter. There might be a little bit less inventory at that time. It just makes it so that you need to pre-plan. Like if you know you need to move sometime in the winter, so be it. You got to make sure that you're focused up, that you're targeting the homes you want in a calculated way that'll get your offer accepted, so that you can actually keep hold of your plans and make the move. Otherwise, you might have to wait until the market opens up a little bit more next summer. So that's just the seasonality of the housing market in general.
And I think that people have gotten very used to the past couple years where there was no seasonality. Homes were available throughout the year. The market was hot throughout the year, and could be expecting that to move forward. And if it's not, if it does get back to a little bit more normal, then they might want to get into it sooner than later. Because once we hit those winter months, if it's someone that wants to move this year, I think summer and fall are really going to be an opportunity, because things might fall off a little bit come winter.
I agree with you about the opportunity. We saw this happen in 2021, where the first half of the year was bananas, lots of competition, incredible things happening in the market, very similar to this year. Now what we're seeing, and I've seen it even the past 30 days, I don't know what you two are, that the market's opening up a little bit. You got like a day to make a decision, right? A day is a long time compared to like 10 minutes, which is what we were dealing with before. And we're not being facetious here. So I love the opportunity, and the savviest consumers, the ones that really get ahead of the market, they look at, okay, there's always homes coming on the market. There's always buyers out there. How does this fit into my goals? And is there going to be less competition as a buyer in the summer and the fall? Historically, yes, that's what the answer is. And you got to throw out 2020 to 2022 because this was the unicorn market. So these are all great predictions here, very well-informed stuff. And here's the thing about predictions. Sometimes they're right, sometimes they're wrong. What these guys are doing, and because they're professionals and they're knowledge brokers, is they're studying the market to make these predictions. And that's the kind of professional you want in your corner. So make sure you're interviewing all the people that are going to get involved in the transaction. So, fellas, anything you want to add here before we cut out?
We're always available.
All right.
Call.
We said it all. We got DJ and Kyle's information right here. We'll be back next week. Get that knowledge.